G'day guys, it's Simon and Crystal from Pumped On Property and welcome to this month's property market update where we look back at the previous month from all of the major players in the game and start to see what's actually happening in the Australian property market. So let's get straight into it today. I'll go through some of the information that's come out of CoreLogic. These guys look at all of the data from Australia and look at capital growth rates, trends around the country. And when we look at their home value index, the national average was up by 0.4% in January. Sydney up by 0.2%. Melbourne actually went down by 0.1%. And then the three leaders last month were Brisbane, Perth, and Adelaide going up 1.6 and 1.1% respectively. So all of these markets are continuing to lead the charge and bring up that home value index. The capital city houses are currently performing extremely well, much better than units in the current market. However, regional markets are starting to see some steam again. We obviously had the huge regional boom back in 2021 when everybody was able to work from home and move into these regional markets. And then we saw a really big drop off. Like if you were to look at the decline rates in 2022 and even 2023 for like the Tweed Coast, Northern New South Wales, the Shoalhaven, even Gold Coast, Sunshine Coast, these markets got absolutely decimated in 2022 and 2023, but they're starting to see a little bit more momentum again, which is really good to see, a bit more of a balanced market. We do expect to see units, townhouses and regional markets start to perform a little bit better. The reason for this is serviceability. People just can't afford it at the moment, so they're forced to look at the next best alternative, which is regional houses or units and townhouses in major metro markets. So great information coming out of CoreLogic again. Obviously things still moving in a positive direction.
Yeah, love it. So jumping into some information from CBA, obviously we know the RBA held the cash rate at 4.35, which has just been announced a couple of days ago. Fantastic news there. According to CBA, a lot of their predictions for 2024 come off the back of monetary policy and whether it's going to stick the same and continue easing. But for now, their predictions basically state that they expect national home prices to increase by 5% across 2024. They do expect to see an easing cycle to commence by about September 2024. They expect the unemployment rate will start to shift upwards a little bit and end the year at about 4.5% by the end of 2024. And interestingly, looking at the inflationary data, it declined from a peak of 8.24% in December 2022 and ended out the year at 4.3% of December 2023, which is fantastic and part of the reason that the RBA continues to hold this cash rate.
Amazing. That's really good to know that the inflation numbers are coming down. I always like to look at the United States as well, and they're sort of at like the 3.5% mark at the moment. They still want to get it to between the 2 to 3% standard rate, but they're normally about 6 to 12 months in front of us. And the chairman of the Federal Reserve in the United States is, publicly announcing now that they will begin to reduce interest rates later this year. So, the perfect storm is really coming together at the moment.
CBA do expect that the inflation data should be at about 3% by the end of 2024 as well, which is in line with the US and about that 6 months behind.
Beautiful, beautiful. Now, if we go over to SQM, the median asking price nationally is currently at $821,710. New listings are actually down 17.5% on a national level, and old listings remain flat and unchanged at 0%. So unfortunately, still seeing extremely low supply levels around the country. Hopefully these things start to shift. Obviously, most people are sitting on a fair bit of equity, so that might be a bit of a catalyst for some increase in listings. Now, if we do look at the distressed listings, they were up just 2.4% nationally over the month. That was mostly driven by New South Wales, which was up 9%. In Vic, those distressed listings actually went down 3.7%. Queensland, they were up by 2.2%, so not too much there, in alignment with the national average. WA was down 1% and South Australia was up 2.7%. That was on a month-on-month basis. Now, if we look at it on an annual basis, distressed listings in New South Wales are up 16.3% and Victoria up 17.8%. So a fair few properties selling under distressed conditions in New South Wales, Victoria, ACT, also Tasmania. Whereas here in Queensland, in Western Australia and South Australia, distressed listings on an annual basis are down quite significantly. So if we look at Queensland, down 29% annually, WA down 30% annually, and South Australia down 13% on an annual basis there as well. So distressed listings aren't really increasing at an alarming rate. Obviously, as people start to feel the burn of the higher interest rates, those numbers might start to shift, which would be good to see more new listings come to the market to find a bit more of a balance between supply and demand.
Love it. And a lot of the data coming out from Simon Priestley at Propertyology plays into that. So he's actually put out a really interesting article in the past week that compares the 4 years leading up to the pandemic and the 4 years since the pandemic. It can't believe it that we're coming up to 4 years. So he put out a really interesting article comparing those two periods, and it displayed a lot of stuff in line with listings being down, house prices going up, population growth and things like that. So I'll jump into a little bit of what Simon Priestley has said here. So the value of a standard Australian house in January 2020 was $760,000. That's the combined capital city average. According to this data, it increased over the following 4 years to $1.025 million. That means that 7 out of every 10 Australian households are sitting on about 35% increased net worth to their principal place of residence in just 4 years.
That's an incredible capital growth rate over the last 4 years, above the national average. And it's interesting because I remember watching the media back in 2020, 2021, where they were really indicating that they believed property prices were going to drop by up to 30%. So 4 years later, they've gone up 35% on a national level there as well. So it's pretty funny to see the difference between what people believed would happen and thought would happen versus what actually happened. And this is a good exercise to understand hindsight. Everyone says in hindsight, I would have held the property. I should have bought the property. I should never have sold the property. These things are a constant, but this information, this data, that's hindsight.
Yep.
So you think back to 2020 and you go, all right, well, everybody was saying that the property market was going to drop. Everyone around the world. It didn't.
Yeah.
And like Simon Priestley, Phil Anderson, Akhil Patel, us here at Pumped on Property were all actually indicating that no, property prices should be going up right now. When we look at the underlying fundamentals, it looks extremely strong. And, that's proven to be the case. So it's just another exercise, another thought experiment to just realize not all the time are people right.
Yeah.
People are actually far more frequently wrong. But anyways, let's see what happens moving forward.
Yeah, definitely. It's really interesting to see. And a lot of it comes down to the supply and demand. Part of it was the monetary policy and APRA's tightening over like the 2016 to 2020 period. Regardless of the pandemic, we were already in such a tight economic market, and the property market was leading into this crazy period of time. Right now, there's only 220,000 properties for sale in Australia. This is why Propertyology is predicting strong capital growth over 2024. Simon Priestley is saying an equilibrium position should be about 350,000 properties for sale. So as you can see, the number of properties for sale versus the demand and things like that is going to potentially push up the house prices, and in line with those predictions coming out of CBA, Propertyology, and a lot of other economists over 2024.
It's nuts because the number of listings that are available are lower today in 2024 than they were back in 2019, 5 years ago. But our population has grown quite substantially over that period of time. So we've got more people demanding properties or rentals, but no properties or rentals available in the market. So, it just comes back to the economic fundamentals of supply and demand. When demand outweighs supply, you're likely to see prices increase.
Exactly right. So I think the population growth was about 1.46 million people from 2020 to 2024, even when you take into consideration the lockdowns and period 2020, 2021, where there was basically no population growth, or at least no migrational population growth. It was only down a little bit on the few years leading up to 2020, which was 1.54 million people. So it still grew substantially in that period compared to the 4 years leading up and the 4 years since, even given that period of lockdown.
So another decent month for the Australian property market in January. We really appreciate you listening to today's video. We'll be sure to come back next month to look at the figures and look at the numbers that have come out of February to see where things are tracking. And we'll continue to bring these videos throughout the year so that you know what's going on from a data perspective so you can make a better investment decision. But anyway, guys, we wish you all the best of luck. Please like this video, subscribe to our YouTube channel, or share this video with one of your friends. Thanks so much. That's a wrap.
That's a wrap.
Get
Have
the
a
pull,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.